Okay, fuck. We have manipulation here. Manipulation between 4:30 to 5 o'clock. Then 5:30. Okay, consolidates, redistribute. Then okay, we have news. Okay, so it's Monday last week. Monday, the last week of January. So today we had news, 8:30 news, and tomorrow I have 10 a.m. news. Then we also have federal FOMC at 2 o'clock. Then 2:30 we have the conference. And then Thursday we have unemployment claims. And Friday, 8:30 we have core PPI. Okay, for the beginning of the week, going back from the daily chart. Okay, I'm going to daily chart. Okay, so going back from the daily chart, we had previous week, which is Monday, Tuesday, Wednesday, Thursday, and Friday. So if this is Monday, the highest high for previous week is here, and the lowest low for the previous week is here. So here we have this daily bullish inversion favorable gap high. So in the future, we are anticipating that this will push price higher. Um, this is where we're going to get the trades to that will take us to the draw on liquidity. So today it's Monday, the opening of the week. So we went down to the daily bullish inversion favorable gap low, and then we traded below two previous day lows. So it's this one and this one. Okay, so now the current assumption will be it will continue and take out this. This is the draw on liquidity. This is where it's more likely to go. So the December high is the draw on liquidity. Okay, so we'll see how it goes tomorrow. If it goes over Zella's, it can probably like even reach the previous year high, which was October high. This is October. Okay, the last month of October. Okay, so what am I seeing from the daily chart? I think from a higher time frame perspective, I think it's still going to be bullish. From this last quarter of last year, the last quarter, we had sell side taken on November, and the the buyers should be this October high as the target from this point of interest. So now, obviously, December and January. Okay, December was consolidation. January it's still consolidating. Now this is the first time what we are pushing up. So I'm assuming that we're gonna keep the momentum and push price higher. So from a 1 hour time frame, what is currently happening? So we have everything. The days. So this is Monday, Tuesday, Wednesday, Thursday, and Friday. Previous day. Okay, today we opened here at 6. We slammed down below previous day low, which is what this previous day low. It's Friday. and then this previous day low is Thursday, and we tapped into this fair value gap, and at the same time it is the daily bullish inversion fair value gap low. Okay, so let me see. Okay, this is the opening price for today. So we went lower at this time around 4. We showed like a Judas swing and then we pushed higher. So this is where we currently at, and it's 1 o'clock at New York. Okay, 15-minute chart. Okay, from the 15-minute chart, you can see the Asian session. It just slammed down, took out the liquidity, and started pushing higher. Then we had the low of the London session from around 4:45. Come the low of um, the AM session, the New York AM session comes at 8:30, of which 8:30 we had like news. This candle, we had news at 8:30. Okay, um, 1 minute chart. Okay, so here the analysis just for the session. The session, the New York AM session from 7 o'clock until 7 o'clock to 11:30. So what am I looking for here? So here at 8:30, it traded below previous 90-minute cycle and it started pushing higher, higher, higher. And then at 9:30, when the market opened, it slammed down, take out liquidity, and this candle, the 9:30 candle, becomes the bullish order block. And this yellow favor gap, this becomes the first presented favor gap. So for this run higher to the draw on liquidity, it started nicely, precisely at 9:30 by slamming down, and 4:14 to 9:30. This is the opening range. It's the opening range. So it fails to even close the opening range. Okay. Yes, it fails to close the opening range, taps, and this 9:30 candle becomes an order block. And where is this down close candle happening? It's happening at the previous day wick CE, the consequent encroachment of the previous day. So we have the one down close, yeah, one black candle, which is a down close candle. Then we tap from that place, we start shooting higher. This time at 40, 42, okay, 45, okay, yes. And then this continues for the whole session until we reach the drawn liquidity, the first drawn liquidity after at the end of the session. So right now we are on this session. So this would be enough for like yeah, it's a proper run. Everything was saying bullish. Okay, so this is how it looks like on a 1 hour. Okay, okay. Now moving forward, this fair value gap that I'm marking right now, it will be the most important fair value gap for me moving forward, because that's the only discount array that is available, and I'll mark it blue. So this is the 1 hour, 1 hour fair value gap. Okay, so I'm placing importance to this 1 hour fair value gap because of it's happening at the consequent encroachment of the previous day week, and also there's this today's first presented fair value gap. So I'm assuming that when the market comes back here, it will tap here and continue with the bullish momentum, unless it trades below here, and then that's something else. So this is just the first day. So previous week high taken. So and the first round liquidity has been reached. So it can attempt to trade to at least 50% of the previous week. At least 50% of the previous week. If this favorite gap fails, then definitely this market will come here. But for now, we'll assume that it will continue with the momentum. We want to see the market tap into this favorite gap and continue higher. At the beginning of the week, okay, this was the first assumption that it taps it and continue high. So this is a nice run for today. Okay,